Oops. Let's see why. Not terrible. Not terrible. Certainly recoverable from. I'm going to start off looking again at our YM from earlier, just because I had these charts up, and I think I probably have to smack this computer around a little bit if I rearranged everything. Here's our 15-minute chart, and you see how that 786 level held like a brick wall? One of the reasons that would have held, and this is what you can do when you're looking at these charts for, the concept of multiple time frame analysis. If that 786 were to break, remember what we've been talking about for several days now, if that were to break, it would imply the target from the same swing being met, high probability of that target being met. We're at such extremes with the Dow right now that we're talking about it making new highs. You're seeing an overlap here too. That overlap is the daily target. When you look at our daily chart, you'll see. So basically we're saying if that 15-minute, that one level breaks, there's a high probability that we're going to see significant new highs. That lets us take the struggle right down to our intraday level. The 786 levels are extremely important. If we look at our 3-minute chart, we haven't really broken much of the support yet that's close by. What we should do really also is take a look at some timing work to see where there may be a significant high. It may have happened already. We may have had some timing overlaps here with the 15-minute chart. Let's take a look, because I know some of you are interested in seeing how the timing is done in real time. And what we're going to do is use that timelines tool, the one that connects 2 points, and just connect the dots, connect the pivots. So here we have an outstanding high, and we will go to the low. See, it doesn't matter where my cursor is. I'm looking at the bar that's highlighted. That red bar at the bottom. I just went from high to low. Let me just move this a little bit because I didn't mean to get it so close to the price line. And I'm just going to erase the stuff that's passed already. I'm going to leave this level, this line here, because that's actually when we made, when we came up against this 786. I just want to see if we have any timing that's reinforcing the current high that's been put in, because it would explain then, basically, when we do this in real time, we do it in advance to see which level may hold, but I wasn't here at that moment, so we're just going to check this out. Again, the 2-point tool, connect the pivots. That's all you have to do with it. It's really, really difficult to make a mistake with this. The only way you can make a mistake
that
is
was low to low?
Low to low, yeah. This one was high to low. We can also go high to high. This one, we can go high to the next high. And you see what happens if you don't clean up the chart as far as getting rid of the ones that have passed, is it gets to be very messy and difficult to interpret. So you just want to take a second and get rid of these. All I'm doing is holding down Control and clicking. Okay, and I'm not talking about a specific trade at the moment because it's really important to all of us. I think that you have the techniques down as well. And let's see if there's anything else here we want to do. Not particularly. Maybe we can take this much earlier low and connect to the high, which I think I missed a little bit. By the way, you can adjust these by just grabbing them with the left, with the arrow, sliding them back and forth. So we didn't have that much time to go into timing on Saturday. That's why we would reinforce it a little bit now. And the other thing we want to do, of course, is use that time expansion tool. And since we're trying to see if there's timing for a high, for the termination of this recent rally, we're going to go from prior lows to highs from the low of the current rally. And let's see if there's another one in here. Yeah, up here, that low kind of stands out. Okay, again, I missed here a little bit because the chart is not the size I need it to be, so I'm just going to left click on it and drag it over a little bit. And there we go. Now let's see what we got actually. Did we have anything in here? Looks like we did actually. Right near the beginning of, one of the first bars where this hit the 786 resistance. It looks like it was reinforced with some timing, pretty significant overlaps actually. We have a 382 alone, doesn't matter that much, but we have 2 bars away, 1618. What am I missing here? Basically, there's a whole bunch of timing factors coming in at several of those bars that have come in contact with that 786. So that's telling us that there is quite a bit of timing resistance along with that 786 price resistance. So what would that have meant if we were actually trading this live at that moment? It would have meant that we would have to take that 786 resistance really, really seriously. And we'd be looking at our momentum indicators to see if there was any chance, any indication that momentum to the upside was failing. And what do we have actually here? Again, earlier on, when we first made contact up with that 786, you can see, what was I saying before about those plus 100 line breaks? As soon as that breaks down, very often then the plus 100 line serves as resistance as well. So what you're seeing here is the short-term struggle. That 786 is right here. You're seeing how the momentum is refusing to break through and beat that resistance. So that long that we were talking about earlier, that would have been the final exit on it. If you were holding, really, if you're trying to get to that target and you were willing to take more of a hit, put your stop in lower, then you'd look for that higher time frame, the highest time frame we deal with on the volume charts, that plus 100 line break. So you would be out at this point. But that's how this is used. That's how I use it for trade management is, okay, we have a reason, price and time is telling us on our Fibonacci chart, it's telling us that there's a reason why we may have to get out. Momentum here is confirming that we really do have to respect that level. Another thing I want to point out, you saw there was timing resistance there. A couple of people asked me questions about the divergence factor, because again, we had to wrap up things really quickly on Saturday so Trace could do his presentation. This is what I was talking about. Price and time on our Fibonacci chart, and look, divergence between the indicator and price. So that was telling us that the brakes were being put on. As I call it on the trade management page, look for, when you have price and time coming together, look for the CCI to tell you that there are signs that the brakes are being put on. And that can have you exit the trade right there as well. So now what's going on? Well, we don't have any kind of trigger setting up at the moment. It also is smack in the middle of lunch hour. At least, well, not for us quite yet, but for the people back east. So generally things are kind of slow and you see some consolidation. Our 3-minute support is still holding. So this hasn't made up its mind yet. It's not really very clear how it's going to continue. At this point though, after our earlier long entries, I would take that 786 seriously. This actually broke the support. And we would be out of that trade with the 786 actually ending up serving as a target, and we'd have to wait. We'd have to sit back and wait to see how this resolves. We're having indications, we're definitely having short-term downside indications at this point. What else am I seeing here? Interesting thing, if you want to see how this works though, I was playing with this a little bit while Chris was talking. Just trying to get rid of that line. The trade that was setting up, that was the first one was in play as we set up. Remember how this came right up to our 1618 target and pulled back? And I was saying, well, you could scale out, re-enter. We had additional entry triggers here. And what's interesting is at that point, using the same extension method of putting in the extension targets, that next swing, well, look where price stopped on the next swing up, the next 1618, which, by the way, happens to overlap that 15-minute 786. As I was saying on Saturday, when you have different swings and different methods of Fibonacci analysis, all pointing to the same place, you have to take it seriously. And it's going to be there, it's going to be happening whether you know about it or not, whether you have those lines there or not. So it kind of pays to have that information up there, because you have the longer term people with this 786 saying, no, we don't really want it to go higher. We don't want it to go higher. If this goes higher, this means that we have to make really significant new highs. And you have the short term people saying, we want it to go higher, but guess what? This is enough right now. The market is extended. So you had something pushing it down, and the short-term long traders saying that's enough, we're going to pull it down now. And you had timing also saying, based upon what's happened and how long each rally took prior to this, it's now time for it to pull back. So what we do is we sit back and wait for a set of clear triggers, an understanding of whether or not our additional 3-minute support is going to hold or 15-minute resistance break. That's it. Profitable morning. Time to sit back. Let's take a look at the Russell. And any questions about that? About what we've been through there. No, the next thing I would do, by the way, if this decline on the 15-minute chart lasts for a couple more bars, what we can do is try to find the timing for a low, because that would be the termination of the corrected decline. We want to see whether or not we can reinforce our Fibonacci support with timing support based upon how long it took prior corrected declines to play out and then terminate. Okay? It's a little premature for that. How do you tell that at a glance? Well, this is something after doing timing work for a long time that you catch on to. You eyeball the chart and you just go, okay, well, how many bars did the average prior corrected decline last? The shortest one I'm seeing here is like, 4 or 5 bars. We're only 2 bars off the high right now. So it'll be more important to see what happens with CCI, what happens. We tried to do timing for a low right now. It's quite possible that other market factors would give us a rally before that even played out. Now I want to see what's happening with the Russell because we had that Gartley resistance setting up. So hopefully I actually arranged my charts properly and they'll come up. Okay, we haven't quite made it. I was playing with timing here before while Chris was talking. And this is kind of interesting to me. Also, this is something that we see happen at times. We did have timing for a high here as well. You see these bars are pretty closely overlapped, 11 a.m. there. That would be 11 a.m. Eastern because it's my computer's time is set to that. 11, 10:45. 11:15, that is a pretty powerful timing cluster. Thing is, I don't really have a good resistance price level here. What happens when you see that occur very often, usually, market pauses or pulls back a little bit, and generally then you have additional triggers in the direction of the trend. That's possible. A minor extension would have been there, something that would have shown up a little bit better on a 3-minute chart. But that's not enough really to say, we're going to have a serious decline. We have this Gartley resistance set up here that may indeed pull price upward. Timing resistance alone, as I said, just serves as it kind of gives the market a little bit of a bellyache. It's like a temporary malaise. And we can also reinforce our support here a bit by taking the most recent swing into the high. It's probably a little better on a 3-minute chart. Do you guys understand why I flip back and forth between a 3-minute and a 15-minute? I'd like to see what's going on, whether the time frames are in alignment, whether I have 3-minute support and 15-minute support, or whether the 15-minute is showing me more resistance and the 3-minute is showing me more support. See, this means I could have used the whiteboard. So, anyway, that's where we are right now. We don't have any clear triggers, just at the moment. Our volume charts are just kind of waffling around here. Again, the longer term trader, based on this volume work, would have been out of the trade at this point. This is the 3,000 volume chart, and we have broken down below the plus 100 line. Notice that our earlier plus 100 line bounce did fulfill its promise and give us a new swing high. Was that particularly useful? Well, what's more useful is the fact that once we saw momentum break, you knew to get out of the trade. I would still favor long side here because we really don't have anything significant in the way, Fibonacci-wise. We've also broken, if you remember what I was saying before, we've broken that 786 from this high to low, so we should at least make it up to this Gartley resistance. And that would really be what I would consider the primary target at this point. Okay, any questions?
On your training videos, did you have down at the bottom some vertical lines that represented time?
That It depends on which video that was. Maybe not on the training videos, maybe on the weekly update videos, because sometimes I use other software to do timing in the weekly updates because I'm looking at 100 charts to do the longer term. So I use some other tools for that to just accelerate the process. The tools are basically the same. That's just a program that helps to automatically tell me where there's the most alignment. In other words, where there are more of these things lining up, these timing factors.
Yeah, the dynamic.
Yeah, but I do not recommend, I like that program, but I don't recommend using automated tools unless you understand exactly what they're doing. The way to understand what they're doing, any automated tool for timing, is to learn how to do the work manually. Because it's way too easy to feed in garbage data to an automated tool. To just go, okay, well, tell me where there's timing. If you don't practice which swings to choose, how to connect those dots, like I was showing you, choose the pivots, the swing highs and lows, that'll give you a really, really wonderful reading that'll mean nothing. So this is the way to really understand how to do that work. I wish I had something really more exciting to show at the moment, but generally what we find is that, traders in the stock index stock index futures take lunch breaks. This is not a 24-hour market. Some take longer lunch breaks than others, but there's nothing setting up right now. We have a conflict between time frames. We have, actually, let me see if I can define that. Having broken down below the plus 100 line, this is the CCI stuff again, and I think you guys understand why I'm going back and forth between the Fibonacci and the CCI. We use the CCI to show us what the momentum is against the Fibonacci levels. By against, I mean when it's smack up against them. Actually, touching or close to in contact. Right now, this is saying upside momentum is kind of in jeopardy. We broke down below this plus 100 line. Longer term intraday. Has it triggered in one direction or another? No. I'd actually like to see this, if it's going to trigger alongside, I'd like to see it pull down a little bit more. Why? If this were going to give me a long side trigger, why would I need this to decline a bit more?
You have some retracement.
Right, but what if I'm looking for a specific trigger?
The 6 has to go below the 100. See what you're talking about?
No. Well, the 6, at this point, the 14's already below 0. The only long side trigger that I could have on this particular chart right now would be a 50-14 long. For that, the 14 has to get down to the minus 100 line. So what does that mean? I mean, that sounds like a bunch of gibberish, okay? What does that actually mean as far as the retracement? What it means is, if it's going to pull back this much, to have enough room to go up and attack our resistance, I want it to pull back a little bit more to have some leeway. That's why, even though those triggers sound kind of arbitrary, they're not. They each have a specific purpose. The plus 100 line bounce is a minor pullback, and then a push thrust to a new swing high. Once it breaks down below that, it becomes questionable as to whether or not the next swing up would be actually a solid move, or whether it's still to extend it, and it would pop up and hit a 786 and fail again. So you want the market, indeed, as you said, you want it to give you enough of a retracement, but we've quantified this into very specific things to look for on those squiggly lines. This particular pattern that I'm looking for that would tell me it's enough of a pullback needs to pull back a little bit more.
Is that showing divergence?
Yeah, and we had timing.
Right.
So there you go. I don't think that that's really going to hold as a very significant high, because we don't have a fib resistance level here. The YM is a little bit more, came against that 786 and held. It looked like just when we flipped away from that chart, the 786 actually broke, and it came up against that symmetry that we'd set up earlier. So it's testing whether or not, let's go back to that chart. Maybe it even broke through already. No. Okay, remember this symmetry that we set up as soon as we started today? This level? It's from this low to high projected from the low. So what you're seeing right now, the definition of these levels as far as how they relate to the market, these support levels holding means the uptrend is winning. This resistance level holding means the downtrend is winning. The side that wins is the side that breaks. Make sense? In other words, for the upside to win, we want to invalidate the concept of the downtrend. Do we have to wait until that breaks to take a trade? No, not if we have our momentum indicators saying that it's going to go upside. But the more room you have before you take that trade against that resistance, the better off you are. That's why we use those clearly defined CCI triggers to say, okay, in this case, we need more of a pullback. We don't just jump in when it starts to rally unless one of those 4 CCI criteria are met. Because once it's broken that momentum of the plus 100 line, that standard deviation, we need to see it pull back a little bit more to have the oomph once it resumes to break through the res. And another thing, you don't necessarily have to break the res. If you have enough room to take a profitable trade, I think Chris touched on this too. You have enough room to get up there and still put money in your pocket, that's fine. What you don't want to do is enter that trade without all your momentum stuff confirming when you're right up against the resistance. Okay, understood? Okay, cool. A little bit more, if it lasts a couple more bars on the pullback, then we may be down towards that support, and it would make sense to run some timing for a low. Right now, the time you don't want to run timing is when you're right in the middle of the prior swing. And even, this isn't really in the middle of the prior swing, but it's in the middle. Would you run timing for a high here or for a low? It's impossible to say. Is it rallying or is it in a decline? There's no way to ascertain that. So we want to see it at least take out a little bit more of the support, drop down some, or if it resumes the rally, I'd start looking for high timing again. So right now that's what's going on there.
Give it another 20 minutes.
Sorry?
Give it another 20 minutes, till about 22. Maybe it'll start to...
Yeah, well, it's 1:20 in New York right now, so it could start to set up towards the end of the lunch break, usually 2 o'clock New York time, 1 o'clock Chicago. Let's see if the bonds are doing anything at all. Would be nice. Bonds. Oh, that's my bonds volume chart. That right now. You see what I was saying before about how the higher time frame had not triggered on the bonds, so indeed that 786 got in the way. Because the bonds are a real struggle right now. I mean, the daily momentum, the intraday momentum has been to the upside, and all that resistance is saying it may very well reverse. So that's going to jiggle around a bit. I'm not touching it unless we get a longer time frame, the highest time frame trigger. Don't have it right now. You guys want to break for a little bit and come back and see if this sets up more in 15 or 20 minutes? Looks like everyone wants to walk around a bit or something. You guys want to break? 10 minutes?
Sure.
Okay, cool.
Mark, I think we had daily timing. We were in a daily high timing zone in the bonds too.
Major over the next 3 days.
Right.
Yeah. Plus we're below the -100 on the weekly.
Right.
Mark, you do any marketing problems? Yes.
I try to study some dentists and all that, but no, there's certain circumstances where it winds up in a particular way out. But I find that it's mostly after trades. Because the ones I'm not good at. Oh no, there's a William Peters said there's an
I don't know what that's.
Just for later.
Well, he said it. I'm gonna have them
No, I'm not. Yeah, it's just I just started constructing the charts. Oh, okay. Well, you see it on here. Yeah, you see his charts.
Yeah, we can, yeah.
So I just put up the first. What if I said? Not at all. It's very good. But that's just the 500 volume, so I don't too much. Yeah.
You have other things I can look at?
Oh, well, I've got the SRB up if you're interested.
So what can you trade, like, is yours?
I try to, I basically trade them into Russell anyway.
Oh.
Just the indexes. I also trade, bonds, which you just show them. And gold, although he's not going to show it today.
These are
Those are bond shares.
because we don't know ever going to see what obviously in the volume.
But like, he's got three, I only have the one up, I didn't get a chance to put the usually jail. So this is a 500 volume chart.
And that means once 500
Once 500 contracts trade, it moves to a new order. And his thinking about it, and it makes sense, is that on a time-based chart, like right now, volume is lighter because of our lunch. So, why move to a new bar just because of the time? On the other hand, this is countdown is actually the number of, these are the number of contracts, so.
that's the countdown.
Yeah, so every 500.
Oh, it's a time.
Yeah, it's not time, those are contracts, so when this gets down to there, it already happened. When they have 500s. I'm not trading, I just have the Russell chart up, but I don't have it fully constructed yet, I just have the 500. See, what I have to do now is put 1,000 volume on it, and his parameters are 500, there you can see right there, 500, 1,000, he's got the 3,000. So I just have the first one up.
Still all makes sense, you know.
Yeah. Actually, we didn't quite down. Now, just down roughly as much as 5.
So the Russell's the only thing that you have.
Yeah, I didn't get, like I said, I didn't get a chance to do much.
And this is a time chart or regular.
No, this is, the other one is,
The 15, 16 daily.
yeah, that's an actual time chart, but I didn't even get the, I was all screwed up, I didn't get the 14 there. So these are all just half constructed charts.
I just want to actually see the see how different it
If
is.
you want to look at the SRB stuff, I've got some of those.
You can open them.
Both of them at the same time. SRB, that's what he was talking about.
Different grab.
Carlos said you can't have them both though.
Well, sure you can. But now with the same, I mean, I have two different programs. I run both programs. So I'm going to take both the,
Yeah, the regular and the SRB.
yeah, version 4 and the SRB.
Oh, they told me I couldn't. They said that I have to get something. One thing I understood about Christian. I'm smart. He doesn't know my questions.
No, you can run them, definitely.
Wow.
Help yourself. 24 hours a day. For about 2 months, yeah. Actually, we also started to down. Yeah.
Oh, okay, down.
Board.
Yeah. Yes. So, how have you guys been? Yeah, I really wanted to do that since I got here.
Good. Things are going good.
So, you can put this right on the map. That's good.
Yeah.
You know what? You're gonna be on the morning. minus unless Carlos took it off. Because he probably doesn't realize. He'll pause it.
It's pretty fun.
Conflict with our shorter time frame charts. These are actually in position, the 500 and 1000 volume, to give us possible minus 100 line bounces. Now, if that were to happen, if this actually triggers, and what would the trigger be? The 6 crossing back down below 0. If that happens, we're going to start taking out the 3-minute support, and we'll actually have a 50-34 short on our 3000 volume, at least for enough downside to make it worth it. So that would be our short side triggers. What I would rather see happen to complete this pattern, I'd rather see that we start taking out the resistance, because it would be the path of least resistance, so to speak. For that to occur, our first warning will be that we'll lose these minus 100 lines, get 50-34 long triggers, and that'll lead towards our 50-14 longer term long. You see, so this is why I look at the multiple time frames, because one way or the other, they're going to snap into alignment. Either you're going to get your short-term short triggers leading to a longer-term short trigger, or your short-term long triggers leading to a longer-term trigger, and these lines define which trend is winning. So we can just keep that up and watch it, because it's not triggering quite yet. And I think, Chris, go ahead and talk about what you want to talk about, because this is not happening this second. I just wanted to define the setup.
Good.
Thanks.
On the subject of triggers, I know that I've been broad brushing some of the overviews of the charts, and remind me to talk about triggers for exactly when I'm hitting trades, exactly where my my buy or sell entry point is. Remind me to talk specifically about that the next time I'm up. We've had a number of people ask about the educational products that Mark and I have to offer. First of all, you know that this is going to be recorded, and this session will be recorded. But I currently don't have a website just yet, but it should be up in the next month or two. I've been working as a trainer for another company. They invited me to train their members about a year and a half ago, and so I thought I'd try it out, and it seems to be going okay, so I'm continuing with it. But I do have a website that I will be opening up in the next month or two. It's a work in progress right now. I have a number of products out that's available to the membership that I've been working for, but this is what's called my Pro Trader Complete FX course, and it's 12 CDs. It's over 24 hours of stuff, of theory, simulated scenarios, and live scenarios. And every PowerPoint slide that you see on these CDs, there's a PowerPoint slide corresponds with it in the book. Then after the theory, then there's simulated scenarios, and then also some live scenarios as well, in order to integrate. Because ultimately, concepts are ideally integrated in live scenarios. Because one day you may place more weight on one aspect of the market, whereas the next day you may place more weight on another. And we just had, Mark and I kind of feel the same about this. We had so many people ask us, and sometimes I'll do a whole workshop and not even mention this because I forget. But this is available, and it just showed up this morning, and Linda will have it. I guess the price on this is the normal prices. To be honest with you, this has been sold to the other company. I don't even know what they sell it for. It's really $700 or something. I'm not sure, but this one's $618.
$618.
$618. But and then I've got a website coming up. It's called allstarfx.com, and it's written in here.
Say that again.
All-Star FX. So hopefully, I have this. I have what's called Pro Traders Club, and twice a week I integrate all the concepts of the current market environment into videos and then release them to the membership. The reason why I don't do like a chat room scenario like Mark, or do anything live, is just the time factor. And I don't because it's FX, it's very difficult to commit to specific times. And also these days, my routine has been different because of the educational aspect. I was in routine enough for 5-6 years that it's been nice to break out of that routine and do some education. So that's what we've got here, and I think Mark will want to share it.
Yeah, well, first I just want to mention that, thank you, Chris. I just want to mention that Chris and I are both not into upselling stuff. It's like we're not standing here talking about other products and services that we have, thinking like that's why we have you in the room. Because I don't think either one of us likes the idea of even doing a couple of hours of talking without giving you something that you can leave and use. So we're just talking about what it is that we do otherwise in case you feel it would be of benefit to your trading. I have a website that has been a work in progress for a long time. I'll just show you what it looks like here, and I'll give you the link to, see, this would be an ideal opportunity for someone to have hacked it and to have, like, porn come up or something, but heart and mouth moment. I have several free videos on this site, examples and stuff. I think also you can sign up for some of the updates I send out. I was in the pattern for about a year, doing about an hour's worth of video on current market conditions once a week. I backed off from that a little bit because I do have the chat room now, and those videos are going out to a couple of thousand people, and basically a lot of them would complain if I missed them, missed the hourly deadline. So I was sort of like, that's enough for right now. People who didn't really, ever communicate with me except to say, where's that video? So, but if you sign up on there, anything that I do change on the site, any videos I do or whatever, you'll be mailed on them. Meanwhile, on the site,
What is the site address?
well, here, I'll actually give you, I just jotted this down in Notepad so you can have it nice and big. If I can figure out how to make this work since here you go, www.mjbaron.net. And any questions you have about anything on the site, about stuff we've discussed here, the chat room, which I'll talk about in a moment, info@mjbaron.net is a good way to reach me. Did you want me to spell out anything up there?
They can just get it, it's allstarfx.com, it's pretty
Okay.
straightforward,
All right, so there's the contact info. But on the site already, there are a whole bunch of videos. I did a Forex video, based just on the Fibonacci work and some CCI stuff. Towards the bottom, there's a whole overview of Russell triggers. And also, I have this video, anyone who wants to set up their Fibonacci trader charts to resemble mine. And also, I did a webinar on the Gartley. And there's a couple of cheat sheets in there that will show you how to set up, how to recognize, you can print them out, and how to recognize in a step-by-step on doing the Gartley. We do have the chat room also. Oh yeah, I have a course. It's accessible through the website. I don't have anything recorded that you can hold in your hand like that. There's streaming videos, also about 20 hours, a little bit more, and a 100-page workbook that's downloadable as a PDF with a lot of examples. And I heard someone saying the other day that the good thing about the videos is that you can pause me, which I'm not sure how I should take that.
It's a good thing.
It's a good thing.
Otherwise, we get phone calls that get interrupted, and it's good.
Yeah, I think just about everyone I know in my life would love to have a pause button for me, though. Please don't tell my mother that there's a pause button for me. Anyway, that course, originally last year it was $395, and I raised it to $618 after the beginning of the year because I added a lot of materials to it. It also includes membership in the private forums where we're talking about the different markets and tracking what's going on in different circumstances. Forums have been really useful because, as Chris said, some of the Forex stuff, the currency stuff, I'm not awake then, and we have a couple of experts who trade short term around the London Open. So when someone has, as an example, someone has a question about that, someone else can step in and say, well, this is my experience and this is a filter I found that works really well then. We lowered the price for the people here at this workshop back to the $395 from the $618, if you're interested in that. We have the chat room also, which just got off the ground a couple of months ago. It's becoming very productive, I think. There are a few chat room members here. I do the fib work in price and time on a whole bunch of charts focusing on the mini Dow and the Russell. We watch the S&P mostly as a reference to see what's going on with the stock index markets as a whole. We also watch gold and, of course, bonds, primarily for longer-term intraday swings, trade you can get in and hold on for the day. And of course, we keep looking at the longer term stuff too. We have a couple of Forex charts up, but of course, during the market hours, I'm doing 9 to 4 Eastern time. For the short-term stuff, it can be very choppy. Really, the best thing we're doing, I think, with the Forex is that people who want to trade at different hours have all the information you need to take those charts and trade, overnight or whatever. I also mail out for chat room members a whole series of longer-term chart updates with key things to look for. And I don't just do the price and time stuff, we actually talk about the triggers as they're occurring and setting up. And I think most of us have been pretty profitable and also aware of when to stay out of chop. And there's a 1-week free trial for anyone who'd like to sign up, and that can be done through the site. So that's about it on that stuff.
What's your cost for the year?
Well, right now we've just been doing a month to month is $250, and we have a few people. We actually took off, we prorated for July because I don't have a fully trained backup person at this point. So since I'm here, we did a prorate and we figured we'd do the longer term pricing, that kind of discount thing as of August. So I have to talk to my partner a bit about how he wants to run that because he does the accounting stuff. But yeah, we've had several people ask for that. And also, for those who are only interested in the longer-term charts, it's $100 a month for that package. Longer-term means daily, weekly, sometimes even 60-minute if there's a key decision coming up there. So that's, we cover a lot of stocks also in the longer-term charts, and our stock selections have been doing phenomenally well, in all honesty.
You send those out every day, those long-term charts?
Yes.
Every day they go?
Yeah, every day. I do anywhere from 10 charts to 40, depending on what's moving. If something is staying flat, I'll just say, you know what, that whole market sector, you just should look at yesterday's charts because there's no new high or low to deal with. And there's no trigger. But it varies. I'm very honest about sending out what has to be sent out and not bothering when it doesn't have to happen. So it's a wide.
Are you covering on the long term?
Long term, will the stock index work? We're doing a lot of softs too. We're doing just about everything, commodity-wise, metals, whatever stocks we're in at the moment. When I say we, I mean I generally put out the stock recommendations and I take them myself, and we track them so we can keep updating the stocks also, and knowing when we're coming up to a target, danger zone, when to get out. What else is in that long-term stuff? I do the Forex charts, generally just the dailies with the longer-term levels. If there's something really interesting setting up on a 60-minute, those will go out too. So that's why it's so many. And you look at what I do is generally I write a little email and I say, here's the chart package, but here's the most interesting thing happening right now. Here's what you really should be focusing on if you want to see something exciting. But you get all the charts. So that's my deal at the moment.
That's included in the 250 package?
Right, yeah, and some people join the chat room and they really are interested in the longer term charts because what they do is, the concept of the chat room is sort of like you're coming into my trading room. Okay, so some people they want the longer term chart package and they just want the ability to pop in and go, hey Mark, this took off, can you update the support on it so I can see what's going on? They're like, thank you, bye, see you later. Other people in the chat room stay all day, and we hang out, and we talk, and we have a good time. Actually, when the market's slow, we joke around. It's kind of like a family. And then when it's time to get serious, we get serious. And I try to keep a focus on Fridays when things are slow on education. And that can be anything from chart setup to going over the triggers again to refine skills. The triggers or the fib work. Or whatever. It's not necessary for you to do the fib work yourself if you're in the chat room, not at the pace I do it anyway. A lot of people want to do it so they can keep up with something that they're following, I'm not following. A lot of people like to make sure they're doing it properly so they can argue with me. And say, you forgot this level. And, well, makes sense. Okay, and then I generally go, I didn't put that level up because, and we both learned something. So that's the deal. Meanwhile, what's going on with this?
The 395 package again. The one
with the 395 package. Yeah, well, that's a bunch of recordings, and it goes through everything from all the triggers and how to do the fib work step by step. I think at this point it's about 21, 22 hours of recordings. There's streaming, and one of the advantages there is as I add to it, that's one reason why I didn't do it as a physical thing, because it's kind of organic. As I discovered, yeah, that's why I raised the price actually, because several people yelled at me and said you're charging way too little. It was recorded during, most of it was recorded during an online live workshop that I did. And there's, as I said, about a 100-page workbook. Goes through all this stuff step by step, and about 40 pages of that are examples of multiple time frame triggers in trade management. And you get the membership in the forums for that too. I'm going to try to work on combining the chat room with the forums in some way so that we can have people who are only in the chat room and didn't take the course also with a place to talk off hours. So that's upcoming. That's a project I've been putting off until after, getting back home from here.
Can I say one thing? I just want to say one other thing is, I don't want you to buy something that you don't need. So if you want to determine as to the suitability of it, you can obviously look at it. But there's a couple of folks, I think maybe in the class already, that have the product, and you can maybe ask them about it. Okay, to determine whether or not it's something you'd be interested in. Chris has it, and I don't know if Ron, if you have it.
Plus 6 copies, Chris. You guys go to my websites on eBay? Whole bunch of dollars. But it's got my signature on it, so it's worth it.
Ships out of Malaysia.
That's a good point. Actually, there are several people here who have taken the course, my course also, and you guys can chat about it. I also have a 10-day money-back guarantee on it.
Don't be dying, Chris. Not a Mark.
I lied. Like I started off, when I was first talking about this, I'm not into upselling. I don't know if you guys need that stuff at all, particularly the course. I'm trying to get a lot of that stuff covered here. The advantage to the course, as has been pointed out to me, is there is a pause button, and also you study it at your own pace.
Also a replay button, which
is
very, very helpful.
Yeah, and also the ability, obviously, because it's on your computer screen, to freeze and take a screenshot and annotate it yourself.
And what's your mom's email address?
To tell her about the pause button? She has a look that does it. She doesn't need the button. Okay, so let's look at our Russell. Wishy-washy. Wishy-washy at the moment. We're not quite getting triggered here. It looks like it's leaning towards short side. We have minus 100 line bounce on our 1,000 volume. Where's Chris's little toy? Not definitive yet. Really trying to break below that 34 EMA here. It's counter to some degree to what's happening on our 15-minute pattern, but notice how we weren't able to make a new high here. What this is telling me right now, trying to go to short side, and I would be happier looking at something else that might be sitting up more clearly, because it's kind of like, still got a lot of support here, 15-minute support here. At least it hasn't triggered. I don't like the lack of a clearly defined short-term trigger, because that means even if it has some follow-through, eventually it could do it like this and be kind of uncomfortable. Safest bet here would be to wait for a longer-term trigger, like our 5034 here, which we don't have yet on the 3000 volume, and then a little bounce and additional short-term short triggers. Aggressive traders could get short now, by all means. Like I said, I'd rather hang back, because this could turn out, since we don't have a higher time frame trigger yet, could turn out to just be a scalp. I might miss the longer term trade if it doesn't give me the bounce after the initial longer term short trigger. I think one reason why what I'm saying can sound confusing is because of the English language, because I have to keep saying longer term short, shorter term long. It's like, sometimes I want to smack myself or invent a new language. Anyway, that's what I'm seeing here is, you definitely have your short-term short triggers, and I can't really read the number from there. It's flirting with the longer-term long trigger too. Initial downside target we would put on the 3-minute chart, and it would actually be right in the middle of this big support zone, which is what makes it a little bit uncomfortable. Okay, you see those shorter lines, those shorter green lines? Those are our extensions just from the most recent low to high. Okay, and it is making progress in that direction. By the way, you notice how as soon as we made a slight new low, these numbers move down for us automatically. That's one reason why I really like using this program for intraday trading, is because other software I've used for this As soon as we made a new low, I'd have to erase everything you see here and start over. And it takes a long time, and why? When you have a computer, let it compute. Meanwhile, we did, though, make a new swing low, so that has built the resistance up a little bit more. So we want to take this low to high and project from the new low as a visual reminder that whether or not we're in the trade, whether or not we want to jump on the short-term triggers, there is more of a case for the downside being built. And we have our longer-term trigger here. All I need is a little bit of a bounce, and I would take the short at this point. Because the longer-term momentum is confirming to the downside. If we can get a little bounce, we'd have minus 100 line bounces here on our short-term triggers to tell us that we have long-term downside momentum and we'll have shorter-term downside momentum. As I said, aggressive traders will be short already. I tend to wait until everything lines up in my favor, and if I miss a run, I miss a run. I'll find another market where it has set up better. We can take a peek for that now. Yes, Tom?
You go to 5034, setting up on the 3,000.
Right.
So when you say you're waiting for a pullback, you're waiting for a pullback on the shorter term?
Right, I'm waiting for a little bounce just to have additional short side triggers. Okay. I would have, let me tell you a circumstance where I would have been short already, and this is something I was talking about with Jeff earlier, Jeff Richardson. This, let's say we were just approaching the possibility of the 5034 short here, and we were getting a pullback and minus 100 line bounces on our shorter time frame. Okay, when you get a minus 100 line bounce, remember the thing about the 100 lines, it implies that you're going to make a new swing low. Okay, so if we were just in position a little bit earlier to get that 5034 short, and we got minus 100 line bounces here, having not quite yet crossed this, then those minus 100 line bounces would give you, bless you, would give you the 5034. They would all be simultaneous.
But you got a 5014 on 500. That wouldn't be enough.
Well, you know, it would have been enough if I had been watching the chart at that moment and we had actually seen that that 14 was up at the plus 100 line. In hindsight now, I can't fudge the triggers. I would be a liar at that point if I said, well, it probably touched the plus 100 line. I'm not going to do that. I've seen enough people, like I said, who do that. It's possible. It's possible, but I didn't see it happen with my own eyes. So it may have got me in, may not have. All I could see was that we had short-term triggers at that point without the longer-term trigger coming into play. So I had to step aside. What I will do is, if we get a little bounce now, you see how we're getting possible resistance at the minus 100 lines? If that happens, and this is still flirting around here at the 0 line, we get actual minus 100 line bounces, I'll jump on it. I'll jump on it short, because if we get the minus 100 line bounces, this is just going to prove to be a retest of the 34 EMA. The 3 on the Russell, by the way, on the Russell, the 34 EMA on the 3,000 volume is very important factor, and you will very, very often see a cross and a retest and then it taking off. So that's why I really love these short-term triggers after the longer-term trigger too, because the initial longer-term trigger very often leads to a retest also.
So it's like in the short side on the underside of the 34.
Yeah, exactly. And you know what? So often, if you're managing the trade tightly, so often you can get in on the initial short triggers there, and then it bounces just enough to take you out, and then it takes off. So my philosophy or my psychology is, if it takes off without me, so be it. But if it confirms and lets me in, I'm much more comfortable with the trade, because I hate that. I think we all do. I hate, getting in, getting stopped, and bye-bye. And then it runs. Or what happens is you have to re-enter. And it just turns into a more stressful day. There are enough times when you have to re-enter. So we are eating away at some of the 3-minute support. So, I just love to see that bounce. And I'd like to see what's happening with the YM at this point too, because that might have set up more cleanly. And since I actually arranged the charts properly, it's not that difficult to do. Okay, well, the YM actually is looking a little bit different now, because we are longer term. On this one, I have all 3 of the CCI timeframes on one chart. Okay, So we've broken down below the plus 100 line. We don't have a longer term short trigger yet. Again, there's been a series though of shorter term short triggers. See this? You have 50-34 in the center time frame and then a couple of retests. And this is really pointing to possible downside momentum. Without the possibility of the higher time frame triggering short, it's more likely though that you're going to have to ride through this being scalpy, or you're going to have to ride through it with a wider stop so that you can wait for that longer term short. This did not set up better longer term yet. Just by eyeballing this, it looks like we're making targets. You know, once you do the fib work for a while, you can kind of go, okay, that looks like, you know, a target, and it's right by that 34 EMA. Let's take a look at the 3-minute chart and see where those downside targets would have been. Again, right into the support zone. You know, when you see this kind of pattern of higher highs and higher lows and a lot of support, you know that if you're taking shorts, it's counter trend. So you have to be prepared for them to just come back in your face. Get out at the extensions. That's what I do. If you only have short-term triggers, you need to use short-term targets. And you get out at those short-term targets. And let's just see how far back up this came. Yeah, this is actually a little baby Bartley. Little baby two-step on our 3-minute YM. You see this zigzag here? Okay, so we actually came down to the extensions from point B to C. Everyone see that? How do you test to see if it's a Gartley? I'm going to take this high to low, point A to B, and you see how it came up to 618? See? Actually, now the program just corrected, you know, because of the T-plot, it moved stuff down. But if you were looking, you can see that came up to 0.618. So we have some more support to consider here. And we're down at the extensions. I also use the expansion tool in the direction of the move, A to B from C. Reinforces our support. Now, why is that interesting right now? Because we haven't yet broken that 0 line on our higher time frame. This could turn around and all trigger long. First warning will be breaking the downside short-term momentum, those minus 100 lines breaking. Does that make sense, how the time frames fit together? You know, some of us have been watching this for quite some time, so, and if this is new to you, I know it takes some time to come together, but this is saying there's still upside momentum, higher time frame. Right now, lower time frame is downside momentum. They have to snap together. Either these minus 100 line bounces will give us a longer term short trigger, or this will negate the possibility of short triggers by breaking above the minus 100 lines, and this is all going to snap together long. 50-34 long, 50-34 long, 50-14 long, off of the Gartley support. And like Chris was saying yesterday about Pesavento's trend line, also I use the symmetry expansion. You know, we were talking about the crucial point for the Gartley to succeed. Well, for me, it's the expansion based upon B to C. You see that, the zigzag? Because if that's going to form a downtrend instead, this is measuring the possible rhythm of the downtrend. So that line breaking would mean that the Gartley is succeeding and that we would be heading towards upside targets here. Make sense, or did I go back into too fast mode?